What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be giving you an update on the auto loan crisis. Now, it's been about a month and a half since I made my last video, and a lot has changed. So if you're new to my channel, let me give you a quick history lesson. The last 4 years, banks basically took their lending restrictions and threw them out the window. They were lending to everybody and their grandma a lot of money that they should have never done. For an example, they usually give people a bad credit, maybe 80 to 90% LTV, which is loan to value, or all the way up to 110 to 120 if you had good credit. But during these last 4 years, banks are going all the way up to 170, 180% at 84 months. So what do these numbers mean? Well, this means that I can sell you a $10,000 Corolla for $17,000. Or I can sell you a $100,000 Porsche for $170,000. So now you guys can see why cars got so overinflated is because banks allowed everybody to charge an insane amount of money above what they're actually worth because they would finance the difference. Because at this time, the government was printing out money, there was no recourse, and all this basically spelled trouble. On top of that, one of the other scary stats is the fact that 90% of the auto loans that were made between 2020 and 2023 did not have any type of job verification. Now, this is going to come back to haunt dealers and banks as well. Now, when you go out and you buy a car, traditionally the salesman will say, I need some sort of steps from you. Steps are it could be proof of income, which is your pay stubs or bank statements, your proof of residency, which could be a phone bill, utility bill, and 7 to 20 references. These things are very important because this is what helps the dealers and the banks find you if for some reason you do not actually make payments on your car. And you're going to see how this is going to come bite them in the end. So as the market starts to cool down, we're seeing values and sales prices drop pretty dramatically. If you watch my last video, some EVs have dropped almost 50% in value in the first year. So how does this actually affect banks? The banks are all judged by their auto loan performance. So if they're getting a lot of people collecting, which they're not, because remember, we have record high delinquencies and record high repo rates. Also, with the fact that vehicle values are dropping, let's say their $35 million auto loan portfolio is now only worth 30. You may laugh and say, the bank's lost $5 million, but guess what? Now when the bank tries to go out and borrow more money, the other lenders are going to see this and be like, well, you're upside down in your auto loan portfolio. It's not really worth 35, it's worth 30. That means that you can't lend correctly. So we're going to punish you and charge you a higher interest rate for your new money. So what does that mean? That means that whoever gets a new auto loan is going to be paying much higher interest. And they just keep passing the buck down to the consumer. And this is why it's a very big deal. And this is why this is going to affect everybody, not only people with bad credit, but people with good credit. So the number I want to focus on is a new milestone we hit back in January. We have more cars that are 90 to 120 days late. Now, why is this number so significant? Now, remember, these numbers are higher than back in 2008 during the great financial crisis when people are losing their jobs, losing their houses. So that just lets you know what the current state of the economy is. Don't believe the hype. All the news is saying, oh, there's jobs, everything's fine. If everything was fine, why are there more Americans late on their car payments today and more cars up for repo today than there was in 2008, 9, and 12? The reason why this number is so high is because a lot of banks don't want to repo the cars. They owe way more money on them than what they're actually worth. So some banks are trying to kick the can down the road to try to work out some sort of payment ranges because they don't want to lose all that money. Because if they have a $40,000 loan and the car is only worth about $30,000, that means that the bank is going to lose $10,000 if they take it to an auction and a dealer like myself buys it. Also on top of that is the fact that, remember, a lot of these banks didn't collect any type of steps. So without these steps, how are we supposed to find you and find the car? During the pandemic, a lot of people moved around. So from when they bought the car in 2020 to where they're at in 2024 now, it could be a completely different place. Americans are moving all over the place because of either jobs or they wanted to move to a different state to have more freedoms or whatever the case may be. So now, how are you going to track that car if you didn't get all the adequate information? So now it's making it even harder for repo companies to go out and find these cars and for banks to get back their collateral. So let's go to the next issue. During the pandemic, a lot of people got forbearances on their mortgages, car payments, credit cards, student loans, all that fun stuff. So banks weren't able to collect on this. What happened? It did save a lot of Americans money, but then they just went out and spent it on Amazon. So all the banks wound up losing millions of dollars and some of the smaller banks got bought up. On top of that, there are a lot of repo companies that were not allowed to repo during this time. And this is how these companies make money. So believe it or not, all these Americans got bailed out and everybody got free money, but a lot of the small businesses didn't. So they were left to fend for themselves. Now this is coming back to bite all the banks and everybody else in the industry because All the repo companies that went out of business in the last 3 years were very well needed, because now with these record high repo and delinquency rates, there's not enough repo companies out there to get these cars. And now we're going to talk about the fun stuff of what's happening because of that. But first, I want to talk a little bit about Lonebridge. Now, Lonebridge is a company that I'm personally a part of. And what we do is we actually track VIN numbers all across the United States. This helps banks, dealerships, rental car companies, and even private individuals find their cars even faster to help them repo. You get tow alerts within 45 minutes of your car being towed. If it's ticketed, you've been in an accident. Also, we do vehicle history reports, so we can give you up-to-date data who the lien holder is. So if someone tries to give you a fake title, you could sign up today for a 14-day free trial and find out if that car is actually owned by that individual. On top of that, you can put all your auto loan portfolio in there, or you can put the cars you have up for sale just to get some information and some data on them. Now, a link in the description below for a 14-day free trial. Now, before you guys start saying, well, why would you want to help people find cars? Remember, the faster the banks find these cars, the lower rates we can get as we start passing this along to every customer. Because even now today, even with a great credit score, it's getting harder and harder to get good quality loans for regular people. So let's go ahead and talk a little bit about the repo industry, because it is absolutely insane. About 2 years ago, I did a video talking about the repo apocalypse. I told people that this is going to completely change the way car lending is done. There's going to be so many cars, you can't believe it. There's going to be acres and acres of cars. And when I made that video, I got so much grief from all these people saying, it'll never happen. The auto market's hot. The things are good. We're never going to see this in 10, 15, 20 years, blah, blah, blah. Well, here we are 2 years later, and we finally hit it. Eventually, all that frivolous lending I knew was going to lead to something like this. I did interviews with other repo companies that were buying acres of land just because they knew they were going to be sitting on lots of cars. And so that was also in the video. And today, they're literally full to the brim. They don't have enough drivers. They don't have enough tow trucks. They don't have enough space. They're absolutely overworked. So this is where we come into the big dilemma. And this is exactly what happened in 2008. As these banks were starting to hit more and more repos, they started giving them to the repo guys. Well, if the repo guys are overworked, they have to pay more money to get more people in the door. So what happens? Repo prices go up. So back in the day, repos were only about $200 to $300 per car. That was the kind of the average. Every once in a while, you would get a bonus for getting a nice car or a boat or an RV or something like that. But in the 2008 Great Financial Crisis, I remember banks were giving out $1,000, $2,000 to get these cars. Now we're facing that today. A lot of my friends that own repo companies have literally doubled their rates because they need to hire more people, more trucks, more insurance, and obviously inflation is way more. They're even going to have to raise the rates again on these banks to get their cars. But what's happening? A lot of their banks are stopping and not getting their repos because they don't want to pay this crazy amount of money. So they're starting to shift to other repo companies with lower fees. But the reason these other companies have lower fees is maybe they have less people, or they're not spending the same amount of money on skip tracing software, or the ways to track people down. Some of these guys use private investigators to help find where these people ran off to with these cars. So what's happening now? Now banks are begging to get back into these companies, and they're charging no matter what $1,000. They don't care if the loan is $1,000 or $100,000. It's $1,000 a car. Now, all this stuff is going to have a massive ripple effect when it comes to remarketing your car. Remarketing your car is when your car is repoed and put back to the auction. Every dollar that bank pays adds on top of that. So imagine if you bought a $30,000 car and now it's worth $25,000, they paid $1,000 for the repo fee, and then on top of that, they maybe get new keys and clean it up, so they're into another $500. Now they're all into this car for $35,000, but they're going to sell it at auction for $25,000. All these things are going to barrel down and make the market even harder. That's why I'm telling people, when you start going in and you start getting turned down for all these auto loans and you don't know why, these are some of the reasons why, because now it's trickled down to the repo sector. The repo sector is having a hard time finding these cars. And then on top of that, they're having a hard time finding people. So if you have a good driving record and you're looking to have a crazy job, go repo some cars. It's absolutely insane. I've done it a bunch of times myself. It's crazy, but there are a lot of people out there that need help moving these cars. Since that's the bottleneck for where banks can't get their cars back, we're going to see that 90 to 120 day mark go even higher every single month because there's more and more cars that need to be repoed that are just not being repoed. And every month the customers have them, gives them one more month to either hide it, chop it up, sell it for something else, or just hide it in general and just disappear. So all these things are basically pushing the auto loan crisis to a much worse place. So unfortunately, this is the way the market's going. I think it's only going to get worse. I know the economy's slowing down and all these job numbers are saying everything is great. It's not great. Inflation is still high. People don't have jobs. And then on top of that, even if you do get a job, they don't pay shit. But I want to thank you guys so much for watching. Let me know your opinions on the actual repo market and the auto loan crisis. What do you think about repo companies in general? Did you guys know that they were charging $1,000 for repo? And also, did you guys know that repos actually affect the bottom line interest rate that you pay at the bank? But I want to thank you guys once again so much for watching. Please like and subscribe if you learned anything. And if you enjoy a lovely automotive content like this. Also, please follow me on Instagram at Lucky Lopez. And I just started the Snapchat, which I'm supposed to be getting a Snapchat show. It's at Automotive Life. So if you guys want to go to Snapchat and check me out, don't worry, there's nothing naughty there. It's only on my OnlyFans. But I want to thank you guys again, and we'll see you on Friday.